So the last time we did the podcast, we finished up winery revenue and how to increase revenue. So we're going to look at the expenses side of the P&L statement. And this section is probably going to be a lot more accounting oriented than the previous one. So I don't want to bore you, but it's important to understand how your books are set up to understand what the numbers are telling you about your business. So I think that the chart of accounts, which is the term that accountants use for basically your financial statement. So example, if you print your profit and loss, your chart of accounts are going to be like revenue, and you may have other accounts under revenue like tasting room. You may have wholesale revenue. Those are accounts, and the chart of accounts would be all of the accounts, the balance sheet stuff, the expenses. So the term chart of accounts is just the listing of all the different accounts that your winery is using. And we're going to be focusing on the expenses part of those accounts. But in setting up the chart of accounts, you probably had your CPA who does your tax returns set up your chart of accounts, unless you hired an outside accountant or you hired a controller or whatever the case may be. But most times, small wineries will have their tax CPAs come in and help them set up a chart of accounts. While that sounds like a great idea, the reality is CPAs who are doing your taxes will set up the chart of accounts so that it makes it easier for them to do the tax return, not necessarily easier for you to understand what is going on with your winery. The same is true with just hiring an accounting person. In accounting, we are taught to set up certain accounts and to report information a certain way, which is not always the easiest for business owners to understand. And I'm not saying set up your account so that you don't follow the generally accepted accounting principles. I'm simply saying is that for a small winery, you have a lot of flexibility how you set up your chart of accounts to provide you valuable information, as opposed to what your CPA or what your accountant says is how a chart of accounts should be set up. And a good example of this would be your tasting room. For me, if I were helping a winery, I would have a specific revenue section for tasting room so that you could see exactly what your tasting room sold in revenue. Sometimes an accountant would just say, we're going to call that wine sales, and your wholesale sales and your retail sales might all be under wine sales. That's not very helpful, because then you have to dig through and figure out, well, what did my tasting room do? And call down to your tasting room manager. Hey, what did you do today? Whatever. So I would always have a separate revenue account for tasting room, and subsequently I would have a separate expense account for tasting room so that you can match up the tasting room revenue with the tasting room expenses. Whether that goes under cost of goods sold is really a technical issue. Technically, it is a cost of goods sold, but it doesn't have to be under that chart of account, especially if you have a vineyard. If you have a vineyard, I would probably leave the cost of goods sold account to the growing costs and bottling costs of the wine, and then have a tasting room as being a separate operating cost or a separate cost of goods sold account. So you could have under cost of goods sold, you could use sub-accounts, which are very helpful. So you might see your financial statements say revenue with a bunch of sub-accounts. So you might have revenue and then a sub-account of wholesale sales, and a sub-account of tasting room, and a sub-account of wine club. And then when you condense or roll up your profit and loss, it would just have the basic accounts that the CPA would use to file your taxes. So it might just have sales, and it's going to include all of your sub-accounts under sales. Same thing with the cost of goods sold. If you had sub-accounts of growing costs and bottling costs and winemaking costs, that's going to roll up into a cost of goods sold account, and you could have tasting room be another sub-account of cost of goods sold. So sub-accounts are a nice way to track things if you don't have too many accounts. There are other ways to do this with accounting software. You could have designations, or QuickBooks uses the term classes. That's very popular, but at the same time, for a small winery, it just requires you to do a whole other level of reporting and accounting. So in other words, to use a designation or a class when you're doing your accounting, your staff, when they turn in a bill or to be entered into the accounting, they would have to not only know what account it's going into, but also what the designation is. For a winery that really wants to track its varietals and what they're spending on their costs, for each varietal, a designation or a class might be very helpful. And you can do these even with sub-accounts. So you might have a cost of goods sold account with a sub-account of growing costs, and then you might designate or use a class for each varietal of wine that you have. But again, the cost of accounting for that is higher because you have to have somebody setting up the process to keep track of all that. For example, let's say you have your vineyard manager that's out there buying chemicals and whatnot and keeping track of how things are growing. They're going to buy something, and when they turn in the invoice, they have to know, one, okay, this is a growing cost, which isn't too complicated, but they have to know, like, okay, I bought this for this particular varietal or this particular part of the field, which is growing this varietal, and I need to know, designate that, and put that down on the bill so that when I give it to the accounting person, they know how to designate it. This becomes more complex when something that your vineyard manager buys is actually applied to all of the varietals or half of the varietals. Then the accounting person has to go in and allocate that cost to whatever varietals it's doing. Is this useful information? It can be extremely useful information, but it's going to cost you extra in terms of getting that information into the accounting system in a useful way. Do I recommend it? It depends. It depends on how much. If you're a $5 million winery, you might want to spend the extra money to know what your varietals, cost you. If you're a $2 million winery, it may not be worth the extra cost. So, how the chart of accounts are set up does make a huge difference in you as the owner understanding your financial statements. So it's important that you take an active role in telling your accounting person or your CPA, hey, I want to do this or I want to do that. If you constantly have to ask someone else, hey, how much did we spend on fertilizer? How much was the water that we used to water the crops this year? How much did we make in the tasting room yesterday? If you're constantly asking questions like that, your chart of accounts is probably not set up correctly. So you probably need to go to your CPA and say, hey, did you set this up to be helpful to you? Because I need information and I'm not able to get information very quickly from my accounting, and that should be fixed. I mean, your CPA or your accountant or whoever, I don't really think you need a CPA, but your accounting person should be setting up the chart of accounts for you, the owner. The information is for you, not for somebody else. And again, if you have a bank loan, then yes, they're going to have to set up the chart of accounts so that the bank can understand what's going on. But the reality is you own your books, and the books should be communicating to you, not the other way around. It shouldn't be the CPA or the accountant saying, hey, this is the way things work, and getting paid to constantly ask basic questions about your business. So again, keep that in mind. And so in terms of the overall cost of a winery and a vineyard, I think most business owners, and this applies to people outside of wineries, I think they have an intuitive sense of how well their business is doing. And that means, and I'm not talking about like, yeah, they're profitable or their net operating income is X and the value of their winery, that they intuitively know if they're generating enough cash to live their lives. If they're doing well, they'll be generating enough cash to pay their bills and go on vacations, and they're not going to worry too much about the winery because they don't seem to have a problem. Intuitively, it's like, okay, I'm making enough money, so I must be doing things right. And in a large part, I would agree. If you have generating sufficient cash to live your life the way you want to live it, there's probably not too much you would want to change about your winery. Does that mean it's running perfectly? No, but it's running well enough for you to do what you want. At the same time, there might be a business owner that's like, something's not right. I have enough cash, but I feel like I could be doing better. And that's where you really want to bring in someone that knows not only winery operations, but how to do accounting. So that's kind of what I'm talking about in these podcasts is, are you the business owner who senses that something's wrong and wants to fix it? Obviously, if you're losing money and can't pay your bills, you've got a problem, and you probably are going to lose your winery unless you do something quickly. But it's really the people that are kind of intuitively thinking, I feel like this should be doing better, but I'm not exactly sure where. And that's where an accounting person can come in, an advisory operator person can come in and say, well, you're good at this and let me help you with this. A lot of times I'll advise clients in any industry that I work in. The reality is what I offer as a fractional CFO, COO, control, whatever the term is, all I offer the owner is their own time back to go do what they do best. And the best owners are the ones that realize I'm good at this and I'm good at this, but I'm not good at this. So I need to find someone that's good at what I'm not good at. And this is not groundbreaking information. Anybody who's successful will say, I'm not very good. This is one of my weaknesses. So I'm going to find someone around me that's going to be good at that. And I think that a successful winery will have the same thing. An owner of a winery may have had to learn how to make wine. Maybe they knew how to make wine. Maybe they were a very good accountant at the time, but they don't know how to make wine. So obviously, if they inherit a winery, they're going to have to go find a winemaker if they don't know how to make wine. They're going to have to go find a vineyard manager if they can't grow grapes. And alternately, if they did, go to school to learn how to make wine or how to manage a farm, they're going to probably want to bring in someone that knows something about marketing and sales and knows how to do accounting. It's just the nature of how it is. So what I'm really offering back to an owner, if they engage me to help them, is the time to go do what they do best and allow me to do what I do best. And hopefully that synergy works out where we make the winery a more profitable endeavor and the owner walks away with some value added and, quite frankly, some money. So that's kind of how the accounting operating role works if that's where you're weak. I mean, I've seen a lot of wineries where the winemaker ends up being the business manager or the overall manager. And the overall manager is basically responsible for the marketing, the tasting room, the financial reporting, and the making of the wine and the growing of the grapes. And they oftentimes don't really have a sense of how to sell their wine. They just basically do what everybody else is doing, which is like, okay, I guess I'm supposed to sell some of this wholesale. Do I need to hire a salesperson? I need an accountant, and those are the ones that kind of end up spending more money than they need to in order to get these tasks done. So that said, I will end off this podcast by saying I think that every industry, every company, there are usually 3 costs to their business that if they manage and control those costs, they will be successful. And these costs are different across industries, and they're not necessarily the largest dollar cost, but they're the ones that make the most difference in that particular industry. For almost all industries I've ever encountered, labor is a cost that, if it's managed well, is a big factor in the profitability of a company or not. For wineries, and this is my opinion, I think the growing cost, or I should say the overall cost of goods sold, which could be growing, and if you don't have a vineyard, then it's not growing, but the making of the wine and the bottling of the wine and the growing of the grapes, that cost is obviously extremely important, but you could drill down in that cost and say our fertilizer is, the driving force of our entire growing, making, and bottling of the wine. If we can control fertilizer, we'll save a lot of money in that cost. And then lastly, I think for a winery, your marketing cost is extremely important. And this goes back to everything I was talking about in revenue. If you know how to market your wine, know who your target customer is, you are going to save a lot of money versus spending a lot of money in selling your wine. And you're going to have a very targeted cost that's going to bring you in customers, as opposed to I don't know what I'm doing, let's just go do this and spend money and not realize that you're not actually adding any customers. So to kind of summarize, I think the 3 costs that make a winery, 3 costs that if you can manage that make a winery successful are cost of labor, cost of goods sold, and again, labor's part of that, but labor, costs of goods sold, and marketing are the 3 that I'm going to look at more individually because, again, I think these are the most important. And again, your utility costs might be higher than your marketing cost. Your insurance might be higher than your marketing costs, but those are costs that you can't really do a whole lot about, and they're not drivers in terms of your success of your winery. You can lower your insurance costs, you can lower your electricity bill, but the fact of the matter is there's there's only a few ways to get power, and there's, insurance is insurance. It's either going to go up or down, and the only way to change that is to not insure as much. So they're not really drivers of the profitability of a business. But they may be bigger numbers than some of the other costs. These are really costs that, if managed effectively, will make your winery more profitable, even if revenue stays the same. So in the next podcast, we're going to specifically discuss your labor costs. Thanks.